Are you sick of losing money in crypto? Are you buying the dip that keeps on dipping? Well, I'm going to explain throughout this video how you can stop that process. You're probably sick of all this up here. Bitcoin is bullish. Altcoin season is imminent. BTC breakout. Absolute pain in the ass, messing with your emotions. So this video will aim to solve some things on the chart, showing you some basic stuff. And you don't need TradingView. You can just utilize this on an exchange. I'll show you how to do it. It's very, very simple, right? But first, let's talk about psychological stuff. I like to do this sort of things. The videos that do well on my channel are always about psychological, taking profits, buying dips, understanding the trend, market patience, making wealth, all that good stuff. If you like it, if you dig it, like the video, right? But at the end of the day, people are getting sick. They're getting fed up of everyone in the space. And people are saying one thing, people are doing another thing. You need to be your own individual, right? So I'm going to give you some tools in this video to hopefully help you. But as I say, right, influencers are getting you in and they're shilling their Bybit links. They're getting you ultimately into position, then therefore losing money because it's dipping or buying on leverage, which is fucking pointless. But realistically, they always buy the dip. Have you noticed every single move down they're buying every single dip? They are saying they are putting X amount of BTC and they bought this dip. I don't think they are. I think they're just playing on your emotions and therefore making you feel a little bit disheartened because you feel like you're missing out. So let's talk about market patience. Let's go to the charts. Let's change your life. Let's do it. So that's a pretty big, bold statement. Let's change your life, because I imagine a lot of people are losing out on some Satoshis or some USD gains because you're buying in far too early and you're getting caught out. So even though I said you don't need TradingView, I do use TradingView, but you can utilize this on Binance and all the big exchanges because they have the TradingView API. So it'll look very, very similar, okay? Now, let's talk about the basics. Bitcoin. I like to use the weekly, the daily, and the 3-day time frame. They all are a metric and a utilization of a higher time frame, which will give you a better basis. A lot of influencers are using the 1-minute chart, showing you these big, massive clanger candles, getting you in. Now, I often echo patience, structure, being required to get you into a position. Now, I will explain this in very, very clear detail. I like to go on momentum. I do not like to just buy willy-nilly and try and look for the bottom and hopefully get one, or a top and hopefully get one, because it doesn't really work like that. You've got big moves here, right? This is just Bitcoin. This is Bitcoin from basically July to now. Big moves. You can get some great percentages here if you are buying into the trend and also buying the dips correctly. Now, I'm going to go over some rules. Rules are your fucking friend. You have to have some, right? Or you will lose out. Rules will... It's a human nature, isn't it? Rules, right? So let's talk about certain things, right? Let's just talk about from this level up to this point here, which was a 78% move. Obviously, altcoins will do a lot more. Just remember that. But doesn't mean you've got to ape into them. We had a bit of a downward movement here of 25%, sorry. Again, we had an upward movement from this bottom to this top here, 75%. And we have got a much bigger downtrend at the moment, in progress as it stands, right? So that's just the average moves of just this asset alone, right? Now, why would you buy something on the first dipping process and at the same time hope it doesn't go lower? But usually it does. But let's talk about structure. Now, that's just kind of simple kind of levels in terms of percentages that we're dealing with. Too many people try and go for those bottoms and try and get out of the top. So you need to stop doing that straight away. That is the one thing that will change how you think. You need to get momentum of a trade. You need to understand what is going up and what is going down. So let's talk about the basics of chart structure first, because it makes sense, right? You need to understand what a higher high is, higher lows, all kinds of good stuff, lower lows, lower highs, right? So the biggest emergency thing that you need to worry about is a lower high. Let's be honest here, because that is a rejection. You do not want to buy a top of that. And I always say, and I always take the piss out of people, oh, people are bullish at resistance here. And people always go, well, we've got to buy to get over it. Well, yes, we do, but we need to go lower first to get the liquidity to therefore create a higher low. Therefore, we can potentially make a higher high. You don't just hope it rejects from that point and then it just doesn't make sense, man. Anyways, I'm waffling. But let's talk about the obvious, right? Bear with me. Let me just get my tools out. We'll do it. How would I do it? What's the best way of doing this? Let's just do it as an arrow. Just keep it simple, right? So the market's going up. The first thing you need to wonder and want to have is levels of structure where it has a level of support, right? This could be obviously here. From the previous levels, there's all kinds of stuff in the past, right? Around this point. This needs to hold a support. That is one situation, but you could be hoping for that to happen, but it doesn't happen. You actually could be in a potential overrounding downtrend and it actually just rejects. And then what could happen realistically, if you continuously are in that downtrend, you may just form another lower high, which is the rejection point, right? So what you want is basically this. You want it to shoot above the previous levels, and this could be replicated with Bitcoin at the moment with the 46k level, right? It needs to smash through that previous level of downtrend structure, and it hasn't. We need to basically do this, and then what we needed to do is to do this. Now, this sounds backwards to some people because people will try and get in on certain levels, but ultimately it's too risky. We are playing with a game of probability. Remember that. We're not just guessing, it's probability. The risk to reward will be lower here, but the probability will be much higher of success because this could set the trend going fully in an uptrend, and I will go over other indicators to show you why this is important. Now, again, what could happen here? We could actually get a much bigger move to the upside. You're looking for a certain structure pattern which makes sense. Why would you buy into a level of resistance in a downtrend when the probability of it going down is much higher? You don't, basically, right? So that's the obvious of an uptrend, right? And same for a downtrend, right? You just flip it upside down, and it's very, very simple. Like, what happened in a dump, and this is where it catches people out, and I've obviously just talked about the uptrend. The downtrend is the dangerous one, where I personally spot these more than the uptrends. I'm always a better bear, probably noticed that. We always retest levels. We always bounce up. It's called a dead cat bounce, whatever you want to know it as, and it will go up towards resistance, and you think, oh, trend's reversed, it's all right. But realistically, it hasn't formed a new high, and it has just formed a new lower high, or whatever you want to describe it as, and then it will then lead to a lower low. Okay, cool. So that will always happen. So again, you have levels of support, which you think, oh, actually, cool, it's over, the dip's over. But actually, we've got level of resistance here, and then it goes and rejects this previous neckline, or whatever you want to know it as, and ultimately we start ending up going towards further levels of support. It gets pretty ugly when you don't understand it. Anyways, let's look at the chart and let's put this to real life circumstances, because this is why I'm going over structure first, instead of just going over EMAs, because they can get cloudy. I love them, but ultimately you need to understand how they work. Same with Fibonacci. Okay, what has happened here? The Bitcoin range to buy was lower than where we bounced. We bounced off the EMA 21. Now, we need to look at structure. We had the run back up to the market kind of dump from this point here. So if I remove this Fibonacci here, I will show you it. So what has actually happened here, from this dump to this point here, we've corrected up quite significantly. We rejected off the EMA 21 first here. We went back down, and then we've got this massive impulse candle. We have retraced this entire move, right? We've went right the way up to the top of this level, but ultimately it is still, when you zoom out enough, still not created new levels of structure above this previous level, which is where we need to be to become a bit more bullish. Now, people are going to be going in the comments, and feel free to ask any questions in the comments if you can. It does help. Why would you not buy at the bottoms? Well, there's only one rule that you should have to buy low if you want to. And this is the rule. If you're a novice, there's a chance that this isn't available to you. But if you sold much higher, right? Key levels. So when you're buying a dip, rule number one should always be, I can buy the dip if I sold much higher. That is rule number one. Rule number two is, I will not buy if I am introducing capital if we are still in a downtrend and the uptrend is not confirmed. let's talk about those confirming factors. Confirming factor number one should always be structure. We have not created a high above this previous level. That would indicate that we are still at levels of resistance. You are literally bullish at resistance. That therefore could lead to some problems. Problem A could be this. This is the next level. From this previous rejection, which was a big one, by the way, to this low, we are perfectly in line with the 618 level. That is a level rejection, and that is why that level is key. It goes all the way across through the data, and it is actually a very wise and big level. Okay, that could lead us to go much lower if that continues to reject. We could actually go and form, and this could be a fake out, and we could go lower. You don't want to buy that, do you? No, you do not. So this is why you need to be careful. Now, another element of this is buying the dips is, again, if you are taking the opportunity because you got profit, a lot of people will buy these with profit because it's a dollar cost average over time, especially with Bitcoin. It's great to do, but they will also look at resistance levels and get out because they know it's level of resistance, or they'll protect their asset and take some money off the table. Let's talk about other indicators, all right? So already here, I'm going to do a video on Patreon for Fibonacci in much more depth. It is on courses as well, but a lot of people are asking me about extensions. It will be on there. Feel free to jump in. But the one that I always look for, and the one that I always go on, and it does make more sense in my opinion, and I think it works better than others, is the 3-day time frame. The 3-day time frame for the moving average, and also the top metric on the oscillator that I use, is a total market cap. So this is a total market cap. It's just a line graph of the total market cap. The redness is essentially the EMA 21. This is the EMA 21. If the whole market is above this and the whole market is above that, we are probably bullish. You look at the history overall, it looks a lot better, and you can see that on the 3-day time frame how Bitcoin will run the market. If you've got green in the EMA and it positive on here as well, chances are your altcoins and your USD pairs will run. Make sense? Good. So that's some indicators you can use. Obviously, there's more indicators. We could look at the fact of, the RSI. Okay, I use a different metric for the RSI, I use a different number. But if you start seeing bearish and bullish divergences, why would you just jump in randomly when you haven't had a confirmation of a bottom been found in the BTC pair or whatever it may be, right? It's the same with hidden bulls, right? Right now, and I've been talking about this on Twitter as well, we've got hidden bullish divergence. It's a very, very clear and obvious one, and it has been here for a few weeks now, where we've been looking at this kind of range thinking, well, the candle structure is nowhere near that level, but the RSI is much higher. That would indicate trend continuation. So why would you buy the dips at these levels until that is reset and changed? You probably won't. That's the thing. And this is why you need to be ballsy, and you need to look for those lower levels to get in. Now, a question you're probably asking as well, what if you buy lower and the trend is your friend? Well, you could have had an opportunity that if BTC went lower, it could have got some much better liquidity, you could have got a much better order, and then you could have been looking at a potential retest of this level anyways, and also take a little bit off the table just to cover your ass in case you're rejected. So buying dips isn't just as easy as just buying willy-nilly. You need to understand it. You need to understand the metric behind it. Now let's look at one altcoin. Let's look at Ethereum, for example, right? So Ethereum, you can see on the daily time frame, a lot of the green, great, a lot of the trend. And what you're looking for realistically in an entry is a pullback, and that would indicate a higher low. We haven't really had much of that, and this is what the problem is. We've had this, we've pulled back into it, but we haven't really had the juice to go up higher. If, as I said before in the demonstration, if we smash through here, and then this level then becomes a level of support, you'd probably be more inclined to enter because you've got a much bigger run to the upside, and also the trend is probably confirmed in a much bigger kind of environment, which does make sense. But it hasn't. That's the problem. And what we've actually done here, we've actually created, even though we've created a dip and we've went to this level, we haven't quite popped off yet. And these were the targets potentially for the other side. However, as I say, we've actually formed a new continuation, potentially a lower high, which is a problem, right? That is a problem. So for me, why would you buy it? You know what I mean? There's nothing to buy here. The opportunity to buy with profit was here. The opportunity to wait with new capital is still a waiting, patient game. Now, as I said, there is other moving averages you can use, right? I will cover them briefly. I use the EMA 21. Big one, I love it, I always have. Same with this, I use the EMA 21. However, if you are somewhat a learner and you want to do it a little bit slower, go to other EMAs, right? For me, right, if you're a beginner, look at certain ones where you may find it a little bit more comfortable because it's not as fast. So another Fibonacci number could be 34, a little bit slower, but it also gives you a direct link to the fact that it is a Fibonacci number, and it also sometimes has a very, very big basis, and you can also work with it in terms of the trend as your friends, and then ultimately see exactly what is happening on the overall structure. On the daily time frame, that looks relatively good. Other ones you can also use as well if you want to go a little bit further in terms of you're not really at the races with it, is probably the 55. A little bit deeper, but ultimately you can see exactly how it's working. We're currently at levels of resistance on the EMA 55. Personal opinion, it's just what you see in the market. If you want to go into the higher time frames, this will work as well, but not as well on the 3-day time frame or the weekly. You may have to go a little bit shorter unless you are really long-term investing sort of stuff where you are buying the trends, but you've got massive dips to contend with, and it could get a bit ugly. So maybe not use them. There's a lot you can use. It's all about research. It's all about back testing. But for me, I find that the EMA 21 is my bread and butter. I love it, and it works very, very well. If you start to notice certain things, now let's look at some previous trends before we end this video, right? Now, when we're looking at all kinds of stuff here, so as I mentioned before, in a downtrend, for example, this is May, we've dumped, we pulled right the way back into the EMA. Why would you buy any coin if it's not above that EMA? That is a rule that you should also have. If you're using an EMA, why would you buy when it's under it? Unless you are looking to buy with profit. As I say, if you can find an obvious dipping point where it's like a key level of structure and it's making sense, there's nothing wrong with accumulation. However, as I say, if you're introducing capital, why would you want to waste it if you are not buying in the trend? That is the important caveat here. Now, again, you're looking at this, it's obviously, it's boomed right up. Now, this is the one, right, where we haven't really had a pullback, but what we've had is we've had a structure break here. Massive key level there at 2,300. We rejected it and then we flew through. So that could have been easily a stop hunt to clear out some of the noise, and then off we go. Big move. That there would technically be your entry. So you don't always have to wait for a structure break, i.e. or a lower high or a higher low, whatever it may be. If you can see a clear signal that it's smashing through a certain level and you've got a big run, you can always go for that. And if you've got things on your side, so for example here you had a very, very oversold situation in the RSI. The moving average is now gone above on the total markup, so the entire market is trending, and guess what, the market is broken out through a key level and you are looking for an uptrend and you're going to continue the trend. That is a simple way of buying a dip, knowing that the trend has changed. Same with the reversal again on the situation here. So again, you know, profits taken, we've had an impulse, pull back into level of resistance here, which I could highlight here with the fib very, very easily on the 618 level, and went down to this extension level. We consolidated around this extension level, then we got back above this level of resistance, and then basically we went pushed up, we pulled back, and then off we went. You could have entered around this big engulfing candle where we've broken structure here, and guess what? A few days later, we're getting the same signals here again, same situation, i.e. the total markup is trending up, and guess what? Even more so, the RSI again giving you signals to tell you that we are starting to then trickle up. There's a lot of situations, but the rules should be clear. You need to make your own rules, but the simple rules that I can give you is simple, and I've repeated them loads already. If you sold high and you're comfortable buying low for accumulation, crack on, right? That's fine. Key levels are important. But if you're new to the space and you're looking to belt feed things in off the basis of influencers just telling you to buy, well, there's a big chance you may buy this dip, 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 or this dip, or this dip, or even this dip, this bullish at resistance level. Cool. So, what are your bets are? Let me know in the comments. Do you reckon, you know, I know this is the worst trend line in the world, but let's be fair here. there's nothing really a big sign telling us to buy just yet until we get through certain levels and we are concretely in an uptrend. And I don't think we are yet. Interesting, right? Patience is key. If you sold up here and you've got the patience to just wait for it to do its magic, you can change everything about the way you look at charts. If you like this video, I hope you did. I know it's long, but leave a subscribe and a like button. Top tips coming up in the recommendations. Here we go.